This is one of the cleanest A-plus setups that you are ever going to see. Clean break, beautiful momentum, follow through, no discrepancies, textbook trade. But now here's the issue. Traders expect to get a move like this every single trade they get into. So they're not even able to catch moves like this because of maybe capital depletion, to where you are just taking loss after loss after loss after loss, to where you can't put yourself in position to catch a move like this when it does come, or not understanding the market conditions that we are currently in right now to be able to capitalize on something like this, closing maybe too early for a move like this, or just simply entering early and then getting stopped out before the move actually happens. And this setup in crude oil is a perfect example of when everything lines up. When you take the perfect entry and it complements the conditions that we're in and it just runs and it's beautiful, and I can't wait to show you guys this. This isn't some cherry pick trade where I'm going to show you a perfect example of my strategy being played out bar by bar by bar, candle by candle on some random date or random instrument. This is what crude oil is doing in real time, the setup that we just got a few days ago. So I want to walk you guys through exactly how to execute this trade using real-time market conditions and an exact risk model. I'm talking entry criteria, position sizing, risk percentages, stop loss placement, how do we trail the stop. I'm talking start to finish, entry and exit all being executed, this entire setup play by play. But the first thing I want to walk you guys through before we get into the actual charts here is the market conditions that we're in. Why did we get such a big push in crude? Why did this have so much momentum behind it? And right now we're in one of the most volatile conditions for crude oil that we've seen in a very long time. So we got to understand the current geopolitical conditions that we're in right now. Obviously there's some shit going down between the US, Iran, and Israel. This is a direct threat to the oil infrastructure. It's moving some things around. So without getting too heavy into the oil distribution or the global supply, like with just that knowledge, we need to understand that this is what creates such bursts of volatility, such heavy follow through, such heavy momentum here, and why we're getting such aggressive moves in oil. Now, I have been able to capitalize on the beautiful momentum and volatility that crude oil has given us this year so far. But I want to break it down a little bit on my strategy specifically that's not based on headlines or current events. I'm still trading the same exact rules, the same exact criteria, exit criteria, everything is the same, but the only reason this matters specifically is because of how much volatility we're getting. So I'm not changing anything about my strategy. I'm just very aware of the environment that we're in and how aggressive these breakouts are, or how aggressive this momentum is. So how do we tie both of these things together? And this is where you get the perfect storm, the perfect A-plus setup. We've got the volatility, you've got the momentum, but then you've got perfect entry criteria. You've got exact criteria that needs to be met in order for you to see an A-plus setup. Very clear. So when both of those align, you get something like this. This type of environment that we're in is where my strategy thrives. When we get a breakout, I'm talking we get insane momentum. We get insane follow through. When it breaks, it goes. So this is a setup that I didn't take, but many people who trade the same strategy as me was able to catch this setup, which is, that will do it for me. That's enough to get me excited, to get me going, is to see other people trading the same exact strategy being able to catch moves like this. But now, how do we catch it? What does it look like? Let's walk it through. Drum roll, please. Here is crude oil on the 1 hour time frame. So we got a few different ways that we can go back in time and see how this trade played out. First option is the easiest, and it's what a lot of people know. It is the replay tool in TradingView. So if you are looking for a place to back test and truly collect data on different strategies, different playbooks, and visually be able to see your stats from the back testing session, along with real-time entry criteria that you can actively check off in a trade, I would recommend Tradezilla. Tradezilla, I know a lot of people think it's just a trade journaling platform. It is, and it's an amazing one at that. But there's so much more to Tradezilla than I think a lot of you guys realize. So I want to show you guys the back testing tool on Tradezilla, one of the many cool features that it has. I'm talking AI feedback on your trades, which is just absolutely mind-blowing. Back-testing tools, education, trading stats. Think of it like the Google Analytics of your trading. It's going to give you all of the data. You can really nerd out with all things on Tradezilla, and even more to come. So if you're not using Tradezilla, you're probably not as serious of a trader. And I say that with love. I have been using Tradezilla for a hot minute now and have seen incredible results in my trading. Just being able to like narrow down what's working and then double down on it, and then start to comb out what's not working, but clearly be able to see it in front of me. All right, so we've got Tradezilla pulled up here. A few things I want to point out. So we got a lot of great features here in Tradezilla. You can see my profit and loss, the win streak that I'm on, all of the trades that I have so far. Full transparency, Tradezilla is not a verified third-party auditing system. Can Tradezilla be modified, and could I fake $57,000? Sure, I could. Do I care to? No, I don't. But just letting you know that I'm not trying to use this to showcase or give myself credentials, but this is where I get to analyze all of my data, all of my stats here. I can do trade replay, I can do my progress tracker, I can look at my reports for each trade. So you can really nerd out here in just the home dashboard. But then if you go to the left, we've got back testing, mentor mode, which is what I use to see every single one of my sister's trades. I can spy on her trades, see when she's going on tilt, see her entire stats for the year so far. Mentor mode, coolest feature for someone like myself. And then also just the university section where they give tons of education here. So if you're interested in signing up for Tradezilla, I have a code that is either 10% off of the monthly subscription if you use code Tori10, or if you're looking to use this for the year, which I highly recommend. If you're just using this for the month, sure, maybe to test it out, I get that. Highly recommend using this for the year. This is something that I have used for years on end. If you're interested in signing up for the full year, I've got 20% off, and if you use code Tori20, that'll get you 20% off the full year subscription. But how do we go to the backtesting session in Tradezilla here? Let's do it. Now, I have already did a full backtesting session on this crude oil 3 touch point trendline break A+ setup. So I just wanted to see the difference between trading the micros and trading the minis with a smaller starting balance or smaller amount of capital versus a larger amount of capital. So it's cool to see either scenario. Amazing setup here. This is a case where there wasn't any discrepancies. There wasn't like you didn't have to have any intuition or close early or break any rules. This was like a purely by the book setup here. So we are doing our backtesting session here in micro crude oil on the 1 hour time frame. I have already done my top-down analysis. So if you don't know what a top-down analysis is or how to implement that with a trendline trading strategy, I did a full breakdown on how to do a top-down analysis from start to finish, step by step, what rules to abide by, what guidelines to follow. So if you don't know how to do that yet, watch that video, then come back and then we can do this together. All right, we got the break. I'm a breakout trader. This is signaling an entry for me. Some questions that you might already have. 1, do you enter upon break? Or 2, do you wait for the candle to close? You can do either one. This is a 1 hour time frame, so waiting for the candle to close is an option. Obviously, it's a possibility. You can totally do it. But keep in mind, we need to be very aware of the type of conditions that we are in. If we're waiting for an entire candle to close, an entire 1 hour candle to close, price could move so fast, so far from your entry that you might miss the entire move by simply waiting for the candle to close. So just being aware of the conditions that we're in right now and knowing what additional confirmation do I need to add or not add in a situation or a scenario like this. So I'm gonna enter at market, but where does my stop need to go? Coolest part about this strategy, I use market structure to help me identify where to place my stop. Now, what does that mean? What if market structure is telling me to take a $5,000 loss or a $100 loss or a $500 loss? This is where position size matters. If market structure is showing you a significant distance between entry, safety line, and stop loss, which if you don't know what safety line is or how my risk is dynamic or how I incorporate market structure into my stops, watch this video here where I broke down something that I call the safety line. If you haven't seen it, go check it out and then come back here and we'll pick it up. Otherwise, if you already know what a safety line is, amazing. This is it right here. If market structure is showing you a significant distance between entry and safety line or entry and stop loss, there's a few things we can do. Lower position size, duh, easiest one. If we can't, right now we're trading 1 contract of micro crude, we can't go any lower. Now this is with futures. If you're trading CFDs or anything else, you can always reduce position size. In this scenario, we can't go any lower than 1 contract. Otherwise, if you do have more capital and you normally trade with 2 to 3 to 4 to 5 contracts, you could simply just reduce your position size and then boom, you have just tightened the stop or mitigated some of that risk. Second thing you can do, pass up on the trade. Hardest thing to do, not many traders can do it. Being able to stomach this entry would be too high risk for my capital size. I gotta pass this up and watch the trade go without me. Hardest thing to do as a trader is gonna save you a lot of money and a lot of heartache. But where I'm going to place my stop for this specific setup is if the price of crude violates this upward trend line that I'm anticipating it to respect, then I'm willing to take my loss. Now, this is my initial risk. As price progresses, I get to modify my risk. I get to move my risk. I get to trail my stop. I get to move it from my initial loss or my initial risk to break even, to then from break even to profit, and then continue to trail it in profit until it violates the trend line. So that's what we're looking for. So if the price of crude right now at 95.09 comes down and violates this upward trend line, I'm willing to put my stop at 93.62, somewhere around here, depending on how heavy of a position you can come in or not. You can have more room. You could come down to 93.05, 93.50, 93.77, depending on how much room you have to play with as far as the position sizing goes, will allow you to either be wider with your stop or have to come in tighter. I'm gonna come in around this like 93, we'll say 54, 93.54. All right, we are in our position size. We are risking $155 in this position, and we are in a long position. Let's see how this plays out. Now, before we continue, I want to walk you guys through the entry criteria here. So we're going to go into our journal section, trade notes. We're going to hit the edit icon on this position specifically. We're going to go to strategies here. I'm going to add my 3 touch point trendline break strategy here. Boom. Now, in order for all criteria to be met in this specific strategy, the 3 touch point trendline break, we need to be in trending markets, which we are. The trend line needs to have 3 touch points. Now, this is the trend line that got broken, so let's go back and just verify real quick. 1, 2, and 3 touch points here. Price has just broken a downward 3 touch point trend line. Okay, we can check that off. Low risk scenario. Is the price close to the safety line? Yes. We're taking on $150 worth of risk. We've got a low risk scenario. Price is very close to the safety line. And now last thing, is there over a week's worth of data on the downward trend line that just got broken? How long had it respected the trend line previously before we get in on this break or on this potential reversal? First touch point dates back to March 8th. We got the break on March 27th. Plenty of data behind this trend line. So we can go ahead and mark that off. This right here is the formula for an A+ setup. We are in trending markets. We've got a lot of volatility, a lot of momentum. All criteria was met. The trend line has 3 touch points. We've got a low risk scenario, low risk setup where price is close to the safety line, and we've got over a week's worth of data on the trend line that just got broken. Now, how do we manage the trade? How long do we stay in? How much profit are we gonna make? Is this gonna be a loss? Is this gonna be a win? Is this gonna be break even? How long am I gonna have to stay in this? We allow market structure to tell us. We allow price action to tell us all of the answers to all of those questions. Are we gonna make millions, if not trillions? Probably not. But the conditions that we're in complement this breakout strategy so beautifully. I want to walk you guys through the trade management on this one here. So I'm going to close my strategy system. Okay, so now for the most exciting part, let's see how this trade plays out. Next candle. Beautiful. We're up $100. We're already almost at 1-to-1 R. Okay, 103, still not quite there yet. Boom, 193. We have now made 1.5 times more than our initial risk. But now as price is progressing, it's moving along this upward trend line. We want to trail our stop. Now, what we do want for price to do is create some sort of pullback or some sort of swing low while still respecting this trend line to move our stop up to. So we haven't gotten a swing low yet. All right, we're up $170. Okay, boom, there we go. Now we're up 268. Price created an ever so slight small swing or pullback towards the upward trend line. We can now completely just skip the break even altogether and move this stop in profit. So now if the price of crude violates this upward trend line and comes down to this 95.97, close us out of this trade. Worst case scenario is a profit of $88 here. Now, this is also where a lot of people get very confused. When it comes to the risk to reward, your R multiple, how much you're risking versus how much reward you're looking for. Since this strategy is so incredibly dynamic, I'm putting myself in position for a very high RR or a very high R multiple. Maybe I could get a 1-to-5, 1-to-6, or there's many times where I get a 0.5 R. But this isn't because I was aiming to make only a portion of what I was willing to risk. This is just what the price gave me. This is just what the price did. I've got my initial risk, my initial stop, the initial loss that I'm willing to take, and then I let price action do the rest. So if I only get a portion of what I was willing to risk, that's because that's what price did. So in this scenario, my original risk was that 150. My reward, if price comes up and breaks this steeper upward trend line, would only be $88. So you just have to understand that the risk is incredibly dynamic. It moves from that initial 1 to 2% of risk, and then as price progresses, you get to move it to break even, then you get to move it in profit. So it's very dynamic. But let's keep going. Let's see what happens. All right. We're up $300. We're up $289. Now we're up $371. Price created another ever so slightly, very small swing low or pullback here, and then continued to respect the trend line. So we're going to take that stop and do exactly what we just did before. We moved it from that initial risk to 95.97. Now we're taking that stop and moving it to this new swing low, which is this $96.87. Now, worst case scenario is $178. So now worst case scenario is that 1-to-1, or just ever so slightly above. But we don't know if this is what we're gonna get. So this is what's so very different about this strategy specifically, is we don't know what the reward is gonna be. So we know our risk, we know our initial risk, but it trails and it's dynamic, and the reward we never know. But we're always putting ourselves in position for best case scenario in case it does just continue to rip. So right now, worst case scenario is a profit of $178. Right now we're up $371. All right, and it's continuing to push higher and higher and higher. Now we're up $409, $458. I'm gonna continue to trail this stop. Now keep in mind, guys, each one of these candles is an hour. So every time I've moved this stop, there's been around like 3 to 4 candles that have gone by. So I'm adjusting my stop every 3 to 4, almost 5 hours here. 1, 2, 3, 4, 5 for the first one. 1, 2, 3, 4 candles for the next one. And now 1, 2, 3, 4, 5. Another 5 candles go by for the next adjustment. All right, we're moving our stop to $98.58. Now, worst case scenario is $349. Let's continue. Boom. Now, let's go over exit criteria. Price is reacting to a key resistance level here. What does this mean? What are our options? What should we do? I want to walk you guys through exit criteria really quick. Journal, trade notes, strategies, exit criteria. 2 things can be met in order for us to exit our position. First and foremost, support and resistance. Is price at or near an area of support and resistance? Is price at or near a key level that is likely to react to and then bounce off or fall off, depending on if it's support or resistance? It'll gravitate towards this key level or towards this price and then reject it. If we go back in time and look at what crude did every time it got to this 101.35, we'd be fairly smart to think, okay, maybe the price of crude is gonna get to this 101.35 and then completely reject. It did it over here to the left. It got close, but not quite, and then completely fell off. Here again, on the 22nd, pulled back, tested it again, completely fell off. Would it be valid to think that the price of crude might completely fall off once it reaches this 101.35? Yes. Could you close here? Yes. Could you go ahead and take your $629 profit with only having to risk $150? Yes. Valid. A few options here. 1, closing at support and resistance, completely valid, completely fair. Especially if you've been in this trade for hours upon hours upon hours upon hours, you very well could just be tired and ready to close this trade. Also, this candle is happening on a Friday. You're getting ready to have to either hold this trade through the weekend or close now for your profit and be done. Trade is ended, trade is closed. You don't have to worry about the markets opening back up on Sunday. So a few options here. Now, depending on where you're at in your trading, maybe you're comfortable holding through the weekend. Maybe you've got enough margin in your account to hold overnight, to hold through the weekend. Maybe you've got a larger amount of capital to work with. Maybe you don't. Maybe you have smaller capital. You can't hold trades overnight, or you can't hold trades over the weekend. So you do have to close at this support and resistance area. So we'll say for those traders that have the smaller capital, are not comfortable holding overnight or holding through the weekend, and are simply just tired of being in that trade and ready to close, this right here is a perfect exit. 101.35, take it. Take those profits. Now, for those of you guys that have the bigger capital, have the risk tolerance to be able to hold over the weekend or overnight, you might be staying in your trade, which would be the second exit criteria, waiting for the safety line to get crossed. So we'll keep this trade going and see at what point would that trader have closed this trade. Okay, so for the trader that has the smaller capital, or is just whatever reason, any one of the reasons I mentioned before, wanting to close at support and resistance, you can go ahead and select that last exit criteria, and you have followed 5 out of 5 of your rules. You can go ahead and close that position. Done. $629 in your pocket, position closed, boom. Trade executed. Incredible risk to reward ratio, all rules followed, breakout strategy complemented by the high volatility that we're getting in crude right now. Way to go. You did it. Amazing setup. Now for those of you guys that did have the higher capital and wanted to hold until the safety line was crossed, let's go over that scenario here. Now we are on the replay feature of TradingView, and I want to get you guys all the way caught up to real-time price action, or at least at minimum until price breaks this trend line for the other example or the other trader case scenario. So Friday, candle closes here at 101.18. Now what happens on Sunday night, market open, crude oil? Boom. We got a gap up. Gap up, big push, continuing to move in your favor, but price hasn't violated the safety line yet. Okay, still hasn't violated the safety line yet. Okay, we got a pretty big push, pretty big pullback here, but then a continuation. It's still going. Okay, now we're hesitating a little bit. We're hanging out It looks like this 101.42-ish area is really pulling the price of crude. Okay, is this it? Price is very close to our upward safety line. Are we going to get the break? Are we finally going to get our exit criteria met for the trader that was using the safety line for their exit? Boom, we got it. Price just violated our safety line finally. Now go figure, it ends up being at around the same area that the trader closed at support and resistance. But this is walking you guys through the exact scenario of what crude is giving us right now, being able to capitalize on the momentum, capitalize on the volatility, and put yourself in position for moves like this and knowing when conditions are in your favor. Now I want to walk us through all the way to real-time price action here, so I'm going to continue to see what happens. Was it great that we closed? Did it go even higher? I want to walk you guys through like the mental capital or the mental aspect of it. When you close a trade and you watch it push higher, you always think, I shouldn't have closed. And I want to walk you guys through how that is not conducive to your trading, and that does create a bad habit. Price broke, puttered out completely. That's hours upon hours upon hours of no movement. It's just hanging around this 101.42. Okay, you're thinking, thank gosh I closed, right? We got this huge pullback. Now I can see an area to readjust my downward trend line. Here we go. Now I've got a new area for my upward trend line. Am I thinking of taking another entry here? I could consider another long position here. We won't go over that now. I want to just get us all the way to real-time price action. Could it be a long position? Yep. We've got our downward trend line. We've got our upward trend line. We could walk through all of our criteria. Price is close to our upward safety line. It's pushing. It's hesitating. It's giving us a retest and then a continuation, a different type of setup, different type of trader, different type of entry criteria would have been met for traders that do the break and retest here in crude, but we're still getting that push. Now, are you thinking I shouldn't have closed? No. You capitalized on a beautiful move here, a huge chunk of this momentum. Yes, we got a pullback here that kicked us out, but it very well could have completely retraced in the opposite direction here. So we were just able to capitalize on one of these pushes. So don't let something like this to where it continues to push, create any bad habits to where you think, you know what, next time I'm not gonna close. Next time I'm gonna hold it a little bit longer. Because next time you could get a complete retracement and then you have just given up all of your profits. But now let's keep going here. Now the trader that took a additional long position, all right, they're in and boom, now they're out. Price completely pulled back. And we're still just hanging out around this 101.42. Okay, we're pushing. We created another break and retest to the downside. But now look at this price action after such a big push. Did we make it a real-time price action? Okay, we're at real-time price action right now. We have just got some consolidation. Price cannot seem to continue to drop back below this 101.42. Price made this big push, and now we are just consolidating. We're snapping back and forth in either direction. Being able to capitalize on that push when it happened, and then to be able to close and avoid getting snapped back and forth in this consolidation is crucial. So what are the final takeaways here? What did we learn from this A+ setup here that happened in crude? One, I want to show you guys what real trading looks like. This is real-time price action. This is what crude just did. The conditions that we're currently in, this isn't a cherry-pick trade from months ago, years ago. This is real-time current events and real-time price action that crude is giving us. And this is what my specific strategy would have been able to put us in position for when we were presented with this entry. But it's about identifying an A+ setup, first of all. Did all of the stars align? Was all of our criteria met? Yes, this is what it looks like to capitalize when all of the stars align. The market structure, the momentum, the volatility, the conditions that we're in crude right now, along with all of your entry criteria, everything aligned in this scenario. And remembering that the strategy itself is not driven by news. I'm not looking at the headlines. I'm not looking at every single news article here. I'm just very aware of the geopolitical position that we're in, the geopolitical news that's happening right now. And I know that we are in a very high volatile environment. So I know that this environment complements my strategy. So I want to be able to capitalize. So the uncertainty of the oil supply, it's creating a lot of expansion and the very big pushes. So when you get a clean break like this and you're in a market that already has momentum behind it, the moves don't just like break and then kind of hang out and putter out and get this slow and steady wins the race. You get that break and then it tends to follow through aggressively. So that's what you guys are seeing here. So I'm not reacting to news, but I'm understanding the conditions that we're in, putting ourselves in positions for high quality setups like these. So same process, same system, but we're executing it in the right environment. So that's what I really wanted to emphasize on today's video. I know this was a bit more of an advanced video. Maybe it is, maybe it's not. Maybe some of you guys are advanced watching this, you're like, It's pretty elementary, but it's just understanding when the conditions complement the strategy. And this right here is chef's kiss. This is when it happens. This is when it aligns. This right here is a perfect A+ setup. This is exactly how it plays out when executed correctly. Clean structure, clear confirmation, in a very defined way to manage your risk, but then showing you guys the actual process of trailing that stop. What does it look like? How often do I do it? But this is the kind of free value that I'm giving on my channel here. So take this, study it, and then try to execute this same kind of setup on your own charts. Be very aware of the conditions that we're in and aware what suits or complements your strategy specifically. If this interested you on the setup or the strategy specifically, I'm doing a full live masterclass on my strategy, step by step, walking you guys through the full system. If you're interested in joining my live masterclass, hit the link in the description below and I'll see you guys there. Quick bonus, if you've made it this far, I do want to walk you guys through the trades that I've been able to place or the trades I've been able to capitalize on while trading in these conditions with crude. So I've taken long positions, short positions. We've just got so much movement and so much momentum in crude that I've been able to take a few trades on all of its movement. So I'll walk you guys through just some quick movement here if you've made it this far. Fun little bonus for you. All right, I'm going to my home page here. Okay, so this is my year to date. We're up 57,626. Maybe it means something to you, maybe it doesn't. I've taken 5 trades so far this year. Started the year off very small, very light, was only looking for, a few $1,000s. I did a $6,700 trade, a $6,600 trade, $7,900 trade. I'm just working up the momentum. I'm getting myself kind of acclimated to the year, but still, the coolest part about this is I'm taking long positions, short positions, long positions, short positions. Then I kind of started to find my footing. I was able to capitalize on an $18,000 trade in crude and then yet another $18,000 trade in crude. So I'm just looking for the consistency. I'm capitalizing on the conditions that we're in. I'm loving the volatility and I'm just being aware or in the know of the geopolitical news that we're in that's creating this volatility here in crude specifically or in the energies specifically. So thanks for hanging out, guys. Hope this was helpful. That's all I have for you guys today and I'll see you in the next video.